Hi class, today what we're going to be looking at is chapter 5, problems 5 through 11b. All right, you should be looking at problem 5, 6b. And what we're going to be doing today is we're going to be figuring up the amount of FUTA taxes and SUTA taxes for this particular company. In September, Painter Wax Corporation began its operations in a state that requires new employers of one or more individuals to pay a state unemployment tax of 4.1% of the first 7,000 wages paid each employee. So the state rate is going to be 4.1% on the first 7,000. That's the ceiling for SUTA for this particular company. That's the SUTA ceiling. An analysis of the company's payroll for the year shows total wages paid of $212,640. The salaries of the president and vice president of the company were $25,000 and $15,000 respectively. For the 4-month period, but there were no other employees who received wages in excess of $7,000 for the 4 months. So only the president and the vice president received wages that were above the ceiling of $7,000. The other employees, there were no other employees who received wages in excess of $7,000. Included in the total wages were $900 that was paid to a director who only attended director meetings. And so this $900 is not susceptible to unemployment taxes because this is a director of the corporation and they are not employees of the corporation. They only attend meetings for the board of directors for the corporation. There was $6,300 that was paid to the factory superintendent and $2,000 in contributions to a cafeteria plan made on a pre-tax basis for both federal and state. And so this $2,000 is not susceptible to the unemployment taxes because it's some type of insurance payment. In addition to the total wages of $212,640, a payment of $2,000 was made to Anderson Accounting Company for an audit it performed on the company's books in December. This is not applicable to this problem. Compute the following, round your answers to the nearest cent. They want you to compute the FUTA, net FUTA tax in part A, and we do that by starting with the FUTA taxable wages or finding the computations for the FUTA taxable wages. We're going to start with the total amount of wages that was given. They told you that they paid wages of $212,640. But some of these wages were not susceptible to the unemployment taxes. You'll remember we have to back out the director's amount that they paid to the director of the corporation, who's not really an employee. So we're going to subtract that from the total wages. Also, there was a non-taxable portion of the president's and the vice president's salaries. You'll remember they said the president's salary was $25,000. Out of that $25,000, only $7,000 are susceptible to the unemployment tax. So in other words, we have to subtract the ceiling to determine how much of those wages are really not taxable. So 25,000 was the president's salary minus the $7,000 ceiling will leave you with the amount of wages that were not subject to the unemployment taxes. The same is true for the vice president of the company. The wages were $15,000. We're going to back out the ceiling amount, and what's left are the wages that are not taxed for unemployment purposes. So when you put this in a formula, what you're going to come up with is $26,000 of the wages were not subject to the unemployment tax. We also have to back out the pre-tax cafeteria plan contributions because those are not a part of the taxable wages. So what we end up doing is we take the total gross wages of $212,640. We're going to subtract out the $900 that was paid to the director of the corporation. We're going to subtract out the $26,000 that is not subject to tax for the president and the vice president. And we're going to subtract out the cafeteria plan that was included in those salaries. So the remainder is the taxable wages. And we're going to calculate FUTA tax first on these taxable wages. So remember, the FUTA tax is a net tax amount. If we paid state unemployment taxes on a regular basis and they were paid on time, we get to take a credit toward our gross FUTA tax. The gross FUTA tax is 6%, but we get a 5.4% credit for paying our unemployment taxes, state unemployment taxes, on time. And so the remainder of that is 0.6%. So the net FUTA tax rate is 0.6%. That would be multiplied by the wages that were subject to FUTA taxes, which was $183,740. And this will give you the amount of the net FUTA tax that this company owes. The amount is $1,102.44. The next thing they want you to figure is the SUTA taxes. And we start out by calculating the SUTA taxable wages, which were exactly the same as what we did for FUTA. We had to back out the director's salary. We had to back out the non-taxable portion of the president and the vice president's salary. And we had to back out the cafeteria plan contributions. The remaining amount was $183,740 that's subject to the FUTA tax rate, which was 4.1% that was given in this problem. It's given somewhere in this problem, right here it is. So when we multiply that out, it gives us SUTA taxes of $7,533.34. Excuse me, $7,533.34. On the next problem, The problem states that in April of the current year, Stillman Press Company transferred Ken Sherm from its factory in Louisiana to its plant in Florida. So Ken Sherm is working for Stillman Press, and he was transferred from Louisiana to Florida. The company's pseudo-tax rates based on its experience ratings are 3.2% in Louisiana and 3.8% in Florida. The taxable wage limits are $7,700 in Louisiana. This is the ceiling. So employers would not pay taxes on anything above $7,700 in wages that were paid to their employees in the state of Louisiana. And there are $7,000 in the state of Florida. So Louisiana and Florida have two different ceilings. You have to take that into consideration when you're calculating your unemployment taxes. This year, the Stillman Press Company paid Ken Sherm wages of $14,190. 4,950 of those were paid in Louisiana. So this $4,950 will be subject to Louisiana state taxes. And the remainder of those wages were paid in Florida. They want you to compute the following. In A, they want the amount of pseudo tax that the company must pay to Louisiana on Sherm's wages. So what we're going to do is we're going to take the number of wages that were paid in Louisiana, which was 4,950. We're going to multiply that by the Louisiana state rate. Their rate was 3.2%. So the amount of pseudo tax that the company must pay to the state of Louisiana is $158.40. In B, they want you to calculate the amount of pseudo tax the company must pay to Florida on Sherm's wages. Now, because this employee was transferred from one state to another during the same calendar year, the employee is still going to be employed by the Stillman Press Company. They're just going from one state to another state. The Stillman Company can include, for purposes of determining a taxable wage base in the second state, the wages paid an employee in the previous state for unemployment tax purposes. So this is the rule here that you have to realize if you are transferring an employee from one state to another. So since we've already paid the state of Louisiana state unemployment tax based on 4,950 of wages that were performed in the state of Louisiana, since Florida's base was 7,000, the ceiling was 7,000, then the difference between the ceiling in Florida and what the wages were that we paid taxes on in Louisiana is what is subject to Florida's tax rate. So 7,000 minus 49,000, 7,000 minus 4,950. The difference is going to be multiplied by Florida's pseudo tax rate of 3.8%. The amount of pseudo taxes is $77.90 that they would have to pay to the state of Florida. The amount of the net FUTA tax, notice that says net there, so we're going to use the net rate, which is 0.6%, If you convert that to a decimal, it's 0.006. And the only tax that's subject to FUTA is 7,000. The ceiling for FUTA is 7,000. So the federal ceiling for FUTA for all states is 7,000. But what you have to realize is that the SUTA, the state tax ceilings, are different depending on the state that you're in. And there's a chart in your textbook that will show you what the amount of the state rates are going to be. And we'll talk about this chart in just a few minutes. So let's go on to the next problem, which is problem 8B. Jake Gore worked for 2 different employers. Okay, now this is a situation where the employee is working for 2 different companies. Until May, he worked for the Wonderman Construction Company in Kansas City, Kansas, and he earned $21,500. The state unemployment rate for Wonderman is 4.6%. He then changed jobs and worked for Bucksmont Improvement Company in Mobile, Alabama, and he earned $33,100 for the rest of the year. The state unemployment rate for Bucksmont is 5.1%. Determine the unemployment taxes for both FUTA and SUTA that would be paid by each company. Now, right here, they've given you a link that will show you what the SUTA ceiling or the SUTA cap, or sometimes I call it the SUTA base, for the state of Alabama is, and for Kansas. So you just click on this link and look up the state for Alabama. Alabama's SUTA ceiling is 8,000 of the first wages that are paid. For Kansas, the SUTA ceiling is 14,000 for the first wages that are paid to the employee. So the Wonderman Company was located in Kansas. So when you calculate the state rate, it's based on the first 14,000 of wages paid. So 14,000 times the state rate for Kansas, which was 4.6%, that was given to us, will give you state unemployment taxes that are owed to Kansas of $644. The FUTA tax, the federal unemployment tax, is based on a ceiling of 7,000. So all 7,000 that this employee earned, they actually earned more than that for the state of Kansas. He earned 21,000, but only 7,000 are taxable for unemployment purposes. We're going to multiply that 7,000 by the net FUTA tax rate, which is 0.6%, and that will give you $42. The total taxes that would be paid in Kansas by the Wonderman Construction Company are $42 for federal unemployment taxes and $644 for state. That gives a total amount of unemployment taxes of $686. For the Bucksmont Improvement Company, the FUTA tax is the net tax again. The ceiling is 7,000. So you would multiply 7,000 times 0.6%, which is $42. To find the SUTA tax rate, you have to remember that Bucksmont is in the state of Alabama. And in Alabama, the SUTA is going to be based on the first 8,000 of wages. So 8,000 times the SUTA rate gives you the state unemployment tax that the employer must pay. The combination of federal and state are a total of 450 that would be paid by the Bucksmont Improvement Company to the state of Alabama. For the next problem, which is 9B, this is going to be a partnership of Cox and Cohen, and they paid the following wages this year. M. Cox, who is a partner, was paid $45,000. S. Cohen, who is also a partner, was paid $26,000. N. Tate, which is a supervisor, is paid $14,350. T. Gorinsky is paid $9,900. R. Sabosky is paid $9,450. D. Brunder is paid $89,10, and S. Carcioni is paid $11,100, and Chu is paid $3,900. In addition to the partnership owed $200 to Chu for work that he performed during December. However, payment for this work will not be made until January the following year. They threw this amount in because he's not paid until January the following year. You don't owe any unemployment taxes on this particular person. The state unemployment tax rate for the company is 2.9% on the first 9,000 of each employee's earnings. So the ceiling for SUTA is 9,000 in this case. In Part A, they wanted you to find the net FUTA tax for the partnership for this year. So what you really need to know is what are the taxable wages that are subject to the $7,000 ceiling for FUTA. And they tried to trick you here by putting in the partners' wages. The partners are the owners of the business, and they are not considered to be employees. So none of their wages are subject to FUTA. But Tate, who is a supervisor, his wages are subject to FUTA, but the base is $7,000. So only $7,000 of his first wages that are paid are subject to FUTA. The same is true for Jurinsky, because they were paid more than the $7,000, only $7,000 is subject to the FUTA taxes. Sobosky also was paid more than $7,000, so only $7,000 of his earnings is subject to the unemployment tax, FUTA tax. For Brunder, they were paid more than $7,000, so only $7,000 is subject for Brunder. And for Carcioni, they were paid more than $7,000, so only $7,000 is subject to FUTA. But Chu was paid $3,900. He didn't go above the ceiling, so all of his wages are subject to FUTA. The total amount of wages that are subject to FUTA then are $38,900. We would multiply that by the net FUTA rate, which is 0.006, and the net FUTA taxes that they would pay are $233.40. I'm going to put net in here just so you'll know that this is the net FUTA tax that we're talking about here. So the net amount of FUTA taxes is $233.40. And again, note that partners are not considered to be employees, so their wages are not taxed for unemployment purposes. In B, they want you to compute the state unemployment tax based on the first 9,000 of wages. That's the ceiling for the SUTA. So again, I've listed all the employees and the amounts that are going to be subject to SUTA. Because Cox and Cohen were partners, none of their wages are subject to SUTA taxes. For Tate, since he was paid $14,350, he was paid more than $9,000, so all $9,000 are subject to SUTA taxes. The same is true for Jurinsky and Sobieski, I guess that's how you say that. And then all of this is going to be taxable for SUTA because they did not meet the $9,000 ceiling. But only 9,000 of these wages would be subject to SUTA. All 3,900 would be subject to SUTA because Chu did not meet the ceiling. So what I did is I added all these together to get the total wages that are subject to SUTA. And then you multiply that by the SUTA tax rate, which was 2.95%, and the SUTA taxes will be $1,439.90. On the next problem, 10B, Roofing Company paid wages of $319,600 this year. Of this amount, $193,900 was taxable for net FUTA taxes, and $193,900 was also the amount of taxable wages for SUTA purposes. The state's contribution tax rate is 4.3% for Roofing Company. Due to cash flow problems, the company did not make any SUTA state unemployment tax payments until after the Form 940 filing date. So if you pay SUTA taxes late, you are subject to a penalty of 10% on the SUTA taxes that are paid late. In A, the amount of the credit that the company would receive against FUTA taxes for its SUTA contributions. Remember, FUTA taxes are subject to a credit of 5.4% if the state taxes are paid on time, which in this case, they were not paid on time. So there's a formula that you can use, and that formula is right here for calculating the credit that the company could receive. The credit is subject to a 10% penalty, or the taxes are subject to a 10% penalty. Note, if the company is late in paying SUTA taxes, the FUTA credit is limited to 90% of the amount of the deposit that would have been allowed as a credit if the late contributions had been paid on time. So this is the key right here. So to calculate this, I start with the amount of the gross FUTA tax. The gross FUTA tax rate is 6%. So 193,900 of wages that were subject to the FUTA taxes times 6% will give you the gross amount of the FUTA tax. Now, this company is subject to some of the credit, but not all of it, because they paid state taxes late. So what we've got to do is we're going to subtract out 90% credit for the state taxes that were paid late. In other words, 193,900 times the SUTA tax rate of 4.3% times 90% is the amount of the credit that we're allowed because we paid these state taxes late. So we're getting penalized 10% of our credit toward FUTA because we paid the state taxes late. We're going to subtract out the additional credit for state taxes if the rate was 5.4%. So watch what we do here. We're going to take the original amount of the credit and subtract the state SUTA tax rate from it, which will leave you with 1.1% that we multiply by the amount of the wages that were subject to FUTA taxes. The amount will be $2,132.90. So we still get some part of our credit, but we don't get all of the credit of 5.4% because we paid the state taxes late. The amount of the credit that we do get to take is a combination of this 90% credit for state taxes paid late plus the additional credit for state tax if they were given the 5.4%. So when I combine these two together, I'm going to get this amount, which is your total credit. The total credit would be subtracted from the gross amount of FUTA, which I restated here so that you can determine the net amount of FUTA taxes that is owed by this company. So the gross amount was 6%. The amount of the credit that was allowed is only $9,636.83. The difference is the amount of taxes that are owed by this company. And in the next part of this problem, they want you to determine the amount that the company lost because of its late payments. Remember, they were subject to a 10% penalty, and that's what the way they're figuring this penalty is you're going to take the taxes, the wages that are subject to the tax, which is 193,900. We'll multiply that by the SUTA tax rate, and then we'll multiply it by 10%. And that would give us $833.77. Or we could have also calculated this by figuring out the total amount of the FUTA credit that we would have gotten if we weren't late and subtracted out what we said that we had as credit. So the amount lost is $833.77. So I've given you two ways that you could calculate the amount that is lost. So I'm going to move to problem 11B. The soap company was subject to New Jersey state unemployment tax of 5.1%. the company's FUTA taxable wages for FUTA were $93,400. And for SUTA, they were $194,300. Compute the following and round your answers to the nearest cent. The SUTA tax that soap company would pay the state of New Jersey. We'll have to take the amount of wages subject to SUTA, $194,300, and we will multiply that by the unemployment rate. The total amount of SUTA taxes is $9,909.30. The amount of the net FUTA taxes is going to be based on the FUTA taxable wages. Notice it's saying net FUTA taxes, so we're going to multiply by 0.6%, and that will give me $560.40. Now, in this particular state of New Jersey, the employees also have to pay unemployment taxes. And the only way you can know that is to look it up on the table that is given in figure 5.1. So in Cengage, click on the link and it will take you to the table. And if you'll hang on just a second, I'm going to see if I can bring that table up. So hopefully you can see this table. Now we're going to look it up for the state of New Jersey. It's in alphabetical order. And right here is where they give you that rate. Notice the column on this chart says this is what the employee pays. Not all states require employees to pay, but some states do that have a high amount of unemployment. They require their workers to pay an additional tax in addition to FICA, the Social Security, and the Medicare tax. They have to pay income taxes, federal and state. Sometimes they have to pay local taxes, and now they also have to pay unemployment taxes in the state of New Jersey. So if you work in the state of New Jersey, you've got an unemployment tax that's going to be taken out of your paycheck. And it's 8.5%. And right here, they tell you what the base is for those SUTA rates of $35,300. But this is where they're getting the tax rate from. So I'm going to go back to my Excel sheet. And so the amount that was subject to SUTA was $194,300. We're going to have to multiply that by 0.845. And so this is the amount that the employee has to pay in SUTA taxes. And that's all I want to talk to you about today. So we'll see you again next time. Bye-bye.